going to have a great program tonight. We have three tremendous guests. We have Victor Parker. He is the Los Angeles District Director of the Small Business Administration. We also have Trevor Schickman. He is the Small Business Development Center Business Advisor. And we'll have Christopher Perry. He's a Los Angeles County Department of Consumer and Business Affairs Business Development Manager. So we're very excited to have these expert witnesses on that will talk about the SBA and other kinds of assistance to small businesses. You know, I started out growing up in a small business. My parents immigrated here, and their story is the same as millions and millions of Americans. They started out poor. They did not have their own home. We started off living in the basement of someone's home, and they went to flea markets to sell gifts and jewelry to make ends meet. Over many years, they were able to save up their money and open one gift store in a shopping center. And then they worked 7 days a week, saved up their money, opened one gift and jewelry store in the shopping mall. And my brother and I would help watch that store because we were free labor. But eventually they expanded to over 6 stores. And so in my mind, they achieved the American dream. They went from being poor to a home, gave my brother and I an amazing education. He is a doctor now. My parents don't remind me of that. But it's one reason that I joined the U.S. Air Force on active duty, because I believe I can never give back to America everything this amazing country has given to me. And one reason I'm in politics, make sure that this dream remains open for people who want to work hard and succeed. And this year has been extremely challenging for small businesses. The pandemic has had a dramatic effect across our economy. And Congress, to respond to that, we passed 4 bipartisan laws to address this pandemic. Some of these provisions include free testing, as well as billions of dollars for vaccine research and research to find a cure. We also put in stimulus checks directly to the American people. We provided funds to hospitals and to states and cities. And we also had a program called the Paycheck Protection Program that provided billions of dollars of small business loans to small businesses. We also provided money to the Economic Injury Disaster Loan Program. And we have continued to make sure that we try to keep our business afloat in America. I think all these laws were necessary. I don't believe they were sufficient to deal with this pandemic. I think we need at least another round of stimulus. That's why the House of Representatives weeks and weeks ago passed the HEROES Act, which provides additional funding as well as additional stimulus checks to Americans. And that is now before the U.S. Senate. And I hope the Senate will take that bill and pass it, or at least come to the table and we can negotiate. In the meantime, there is still money available for small businesses who want to get money through the Paycheck Protection Program, as well as the Economic Injury Disaster Loan Program. And we have 3 experts here that can tell you how to do that, and also answer questions and address any pitfalls that businesses are experiencing. And again, you're here at a town hall with me, Congressman Ted Lieu, and 3 of our amazing presenters tonight. And the first is going to be Victor Parker. Again, he is the Los Angeles District Director of the Small Business Administration. Victor, thank you so much for your time tonight and all the work you've done. And if you could give a few remarks about the Paycheck Protection Program as well as the EIDL program to our small businesses who are watching today. You may have to unmute.
Good afternoon, everyone. Can you hear me? There we go.
Yes,
sorry about that. Thank you, Congressman. Thank you for having me, and thank you, everyone. Again, I'm Victor Parker. I am the District Director for the U.S. Small Business Administration. So this evening, I wanted to take an opportunity to give you an update about what we're doing with the Paycheck Protection Program, as well as the Economic Injury Disaster Loan Program right here in the Los Angeles area. So if you could start sharing the slides for me. There we go. All right. Perfect. So we'll start with we can go on to the next slide. So we're going to talk a little bit about the Paycheck Protection Program first. We're going to talk a little bit about what we've done so far with the program, as well as kind of give you an update on where we are with the program in terms of the distribution of loans at a national and local level, as well as where we are currently. And then we'll also move into the economic injury disaster loan, which is also another loan that, as the congressman just alluded to, that is here designed to help small businesses navigate the pandemic, keep your businesses afloat, and continue to bring our economy back to where it was pre-COVID-19. Next slide. So again, the Paycheck Protection Program, again, is to help the workforce really to stay employed during COVID-19. What it is designed to do is to make sure that we're able to provide businesses with funds that they can navigate to help support their payroll during this time. We've had some starts and some stops with the Paycheck Protection Program, but I'm happy to say that as of July 6th, the Paycheck Protection Program, we resumed accepting applications, and now that the new deadline for the Paycheck Protection Program is on August 8th. Next slide, please. So as of right now, across the country, we have done already $517 billion in loans that have been approved through the Paycheck Protection Program. We've done that through a variety of different lending partners throughout, not only throughout the country, but throughout the greater Los Angeles area. One of the things I'd like to emphasize right now is the fact that the Paycheck Protection Program, you are required to go through a participating SBA lender. So it is very crucial through this loan process that you engage with our various lenders that we have. We have traditional banks, we have community development financial institutions, credit unions, and a variety of different financial institutions that are providing these loans for you. The important piece right now, and I want to stress this early on, is there are a lot of predatory lenders out there. So please make sure you check with our office, the SBA Los Angeles District Office, or check with the Small Business Development Center. And I know my colleague will be talking about their services shortly, because we really want to make sure that you are engaged with a legitimate lender. Again, we have a variety of lenders that are right here locally that can help you. And again, you can always contact the SBA Los Angeles District Office at LADO, L-A-D-O, which stands for Los Angeles District Office at sba.gov. Next slide, please. So this kind of gives you a distribution of the Paycheck Protection Program throughout the various states and territories. And I'm really proud to say that California not only is leading in the number of net dollars that we have been able to distribute and disperse through the PPP program, but California also leads in the number of loans that we have done throughout all 50 states and territories. So this is an opportunity that we want to make sure everybody who has not taken advantage of it to take advantage of it, and let you know that we are leading the nation, as we always do in our small business community, to make sure that you have access to those funds and resources. Next slide. So right now we have about $130 billion remaining for the Paycheck Protection Program. For those of you who have not applied for the program, not found a participating lender, this is the time to do it. The deadline again is on August 8th. And so I want to kind of give you a little bit of context to that August 8th deadline. That is the deadline when the bank is able to submit loan applications to the SBA. So what I'm trying to let you know is you can't go to a lender on the morning of August 8th and have him submit on the same day. They're not going to be able to get your loan processed, go through the proper approvals, and get it into the SBA system in one day. So I encourage you to go to your lenders now, if you haven't had a chance to do that, to give them time to process your loan if they need additional documentation, or if you need to go to one of our small business development centers to help you put your loan application together. This will give you time to do it. At the end of the last round of funding, some banks started as early as 3 to 5 days before the absolute deadline, accepting applications just to make sure they had time to do that. So I encourage you to reach out to, again, my office, our small business development centers, to help you with that and make sure you get your applications in early for the Paycheck Protection Program. Next slide, please. The other program is the Economic Injury Disaster Loan, again, that the Congressman talked about. This is a part of our disaster program and is one of the few loan programs that SBA actually funds directly. So the good news is you do not have to go to a participating lender. You may apply for the Economic Injury Disaster Loan directly on the SBA website. As of June 15th, we again are accepting applications for all businesses, including agricultural businesses and all the different businesses that we have here in the greater LA area. We are one of the most diverse districts across the country. SBA has 68 district offices across the country, and I'm proud to say that Los Angeles, we have just about every type of market, every entity, every type of target business that would be applicable for the Economic Injury Disaster Loan. Please keep in mind for both of these loan programs that whether you're an independent contractor, if you're self-employed, restaurants, barbershops, all of these types of businesses in these different sectors are eligible to apply for both the Economic Injury Disaster Loan and the Paycheck Protection Program. Next slide, please. So as of right now, we have actually approved over $2 million loans in the Economic Injury Disaster Loan, and they have also done over $134 billion in loans. And so again, the amount of loans and the volume of loans and the demand for the loans across all 50 states and US territories has been tremendous. Next slide, please. And once again, in the Economic Injury Disaster Loan, just really quickly, California again is leading in terms of the number of approved loans as well as the number of dollars that are approved. And so as of right now, we are at about, I think we're probably close to 24, yes, we're up to $24 billion in loans, almost $25 billion in loans. And so again, we're doing a lot in California to make sure that our businesses are moving forward. We want to make sure again that everyone has access to this program and continues to submit their applications for the program. Next slide, please. You can go into the next slide. I won't highlight the other states. One more back. So in conclusion, keep going, one more. Sorry about that. One more slide. But in conclusion, the Economic Injury Disaster Loan is still available. The deadline for the Economic Injury Disaster Loan is in December. It's December 16th. As the disaster loan dates rolled out, again, it was by each state being declared. So you do have a little bit more time in terms of the application deadline. However, I really encourage you to apply as quickly as possible, just to make sure we get all of your information, that we go through the process. This will give you more time to, again, if you need to reapply or if there's information that you're missing, it'll give you an opportunity to make sure you can continue to apply for the loan program. And with that, I will turn it back over to you.
Thank you so much, Victor, for that presentation and for all your hard work. Before I have the next presenter present, I want to say if you want to ask questions through Facebook, please feel free to ask them and type them in, and my staff will get them and relay them to us. So now we have our next presenter, Trevor Schickman from the Small Business Development Center Business. He's a business advisor. And Trevor, if you want to go ahead and make your presentation.
Thank you, Representative Lieu. My name is Trevor Schickman. I'm from the Pacific Coast Regional Small Business Development Center. We offer no-cost business advice and consulting to local businesses. I've got 29 slides in 15 minutes. It's 31 seconds a slide, so let's get going. Okay, they've asked me to come and talk about what do you do if you got denied for the EIDL loan. This is the email address that you will need. This is the address that you will send your request for reconsideration. There are 8 reasons you can get denied for EIDL. 3 of them are sort of subsets of the others. So for speed, I've broken them down to 5. The first big one is you're denied for credit reasons. This is the most difficult one to deal with because there's no bright line for what is a credit denial and what isn't. The SBA uses an assessment score based on the experience score and your credit utilization. If you did get denied for credit, the first thing you need to do is get a copy of your credit report and look for things that you can fix. Small accounts that you can pay off, small delinquent accounts that you can pay off, fix any information that's incorrect. Can you get anything that's in collections into a into a payment plan? Can you get taxed it into a payment plan? Can you recover your credit? You'll need to send in your reconsideration request with your federal tax returns, with the IRS 4506T, which is a transcript request for your tax returns. You'll always need photo IDs of the owners, and you'll need to explain how you'll be able to recover your credit, or if possibly that your utilization went up because it happened post the COVID disaster, and your EIDL loan will fix that problem. Now, moving on, the next common one is economic injury not sustained. The most common reason you get this denial is because you misclassified your cost of goods sold on your application. A lot of bad information was out there when people were filling out the forms. A lot of people ended putting down their costs of service or general costs and not their cost of goods sold. So what that says to an analyst at the SBA, if this is too high, is that you're not really going to be incurring any costs while you're shut down. So if that's what you did, you need to correct that, or again, ask a SBDC advisor to assist you with it. Maybe you're operating at a loss and the SBA doesn't see why you would be able to repay the loan if you were operating at a loss before the disaster. The other one you'll see is loss of revenue not sustained, which means you didn't really lose any money during the disaster. If that's the case, you'll need to show reasons why you've lost it, canceled contracts, bank records that show lack of deposits, that sort of thing. You will also need to submit your tax returns to 4506T, correct any incorrect information like the cost of goods. And again, remember, you always have to include a photo ID of the owners. It's really helpful. All right, the next one is character. This is if you have a felony charge, you're delinquent on tax debt, you're delinquent on child support. I was actually denied for character reasons on my own EIDL loan. It turned out to be a mistake. The easiest way to get into this situation is by clicking the wrong button on the form. There are a few buttons on the form that ask you, have you been charged with a felony? Are you in default on debt? And if you accidentally clicked one of those, like I did, Mr. Smarty Pants here, then you're going to get denied for character. All right, if that's the case, you need to again send in the reconsideration request. You'll need the form 912. You can Google one on the SBA site. Again, tax returns, the 506T. You'll need to correct any information that's on there in your photo ID. Keep in mind, there's no document that says you're not one of these things. Okay? There's only a document that says you are. So if you're not and they say you are, usually the 912 allows them to do the background check to figure that out. Again, most of the people that get this, they actually just click the wrong box on the application. All right, the next one is failure to meet SBA guidelines. This is usually for a couple of reasons. The first one is your business is too large, and your business is too large because of what they call the affiliation rule. That means an owner that's a part owner of your business also owns another business. And when you add all those businesses up, they exceed SBA guidelines of 500 employees. There's a few waivers for that, which I won't get into. This tends to happen if you're maybe a franchisee owner and the SBA, when processing the application, accidentally takes into account the entire franchise, not just your location. So you need to fix that and show that you're a single location. The other one is your business activity is not eligible. This happens if you selected the wrong item on your drop-down list of activities. There's a few things the SBA doesn't cover, things like gambling, things that are sexual nature, drugs, speculative activities. If you indicated you're one of those, you're not eligible. So if you're in this position, you need to fill out the form 355. You need to send in all your corporate entity docs, any license you have, city, county, state, to prove what activity you are, and of course, also that photo ID. The last one is unverifiable information. Common reasons for this is your entity is not valid. You didn't pay your $800 to the franchise tax board. Maybe you didn't turn in your statement of information, and so your entity is suspended. Maybe you mistyped your tax ID number, or you switched personal tax ID for the EIN of the business. Another one that's fairly common is you froze your credit report, like many of us did. When the SBA tried to run your credit report, they couldn't get any information off of it. Sometimes it's just a mismatch between your form and your actual ID. To fix this, you need to send in your entity docs, your EIN letters, your DBAs, tax returns, bank statements that you have that will verify the name of the corporate entity that show these two are connected. If you're a sole proprietor, your social security card that shows your number, and again, your photo ID for all owners, 20% or more. Okay, moving on from that to the Paycheck Protection Loan and understanding how you get forgiveness. Understand that we're still working on interim final guidelines. We don't have full guidelines, but we know a lot at this point. So we have a pretty good idea, with the exception of a few corner cases, of how this stuff works. There are two applications that you can use. The easy application, this is particularly for you if you're a sole proprietor with no employees, or if you've had no reductions in your staffing or in your wages, or if you meet one of the safe harbors, which I'll talk about later. Okay, if you can't do one of those, then you have to use the much longer standard application, where you'll have to make the calculations for what you did with your workforce and what you did with your wages, and maybe one of your safe harbors doesn't apply. So this is what the SBA calls a three-step process. The first step actually has 3 tests to it, and that's getting to what we call the modified total. And the modified total has 3 tests to it: use of funds, compensation test, and what we call the FTE test. The second calculation we make is what we call the payroll cap, which is dividing the payroll that you spent by 60%, and that will be the most you can ever get on forgiveness. So here's the formula. You start with your total loan amount. You subtract any funds you lost after the used funds test, and then the compensation test and the FTE test, and that gives us our modified total. So here's an example. We start with, let's say, a company that gets a $100,000 loan. They spent $85,000 of it, $55,000 on payroll, $20,000 on rent, $10,000 on utilities. They don't use $15,000 of it, or they don't use it on an acceptable activity. Therefore, they lose $15,000 off the top. So our running total now for this company would be that starting $100,000 minus that $15,000. Our current running total for our modified total is $85,000. The next is our compensation test. And what this means is we're allowed to reduce the wages of our employees, but by no more than 25%. So let's say in the quarter that we have to use to, for comparison, Q1, we had an employee that we paid $20 an hour. That means we can pay them as little as $15 an hour, but we can't pay them any less without taking a hit to our forgiveness. Anything we pay them less than $15 is a dollar charge against our forgiveness. So let's say an example, a company took that same employee and paid them $12 an hour. That means the difference between what they're allowed to pay, $15, and what they did pay, $12, which is $3, they're going to lose $3 for every hour that employee worked during what's called the covered period, which is the time you have the loan. So in this example, this employee works 20 hours a week for 8 weeks. That calculates out to $480 of lost forgiveness because of the reduction of wages. Here's a chart of how that might look like. If you look at employee 2 and employee 6, notice they had reductions in wages, 10% and 22%, but that falls within the 25% safe harbor, so we don't lose any deductions. But employee 3 and employee 5, we reduced their wages by more than 25%, and these are wages, not hours. Hourly deductions come on a different test. Okay, so the difference between what we are allowed to reduce and what we did, we take a dollar reduction. And in this case, it comes out to $1,366. Now notice employee 7, we actually paid them 0. That's 100% reduction, but we don't take any hit to our forgiveness here, because by 0 means they didn't work. And this test is not about hours worked. It's only about the wage rate paid. So at this point now, we started with that 100,000. We lost the 15 for failure to use it properly. We lost another 1,366 because we had 2 employees we didn't pay at least 75% of their wages. We're down to 83,644. The last one is the FTE test. This is the most complicated. The way you calculate FTEs, which stands for full-time equivalents, is any worker that works 40 hours a week or more, we call them 1. Anyone that works less than that, we can do one of 2 things. We can divide their hours by 40 to get a percentage of full-time, or we can just call anyone under 40 a half-time. You have to do it both ways to see which one works best for you. You get to do it yourself. The covered period is either the 8 weeks from the day you got the loan, or by the new act, the 24 weeks from the day you got the loan, or December 31st, whichever is shorter. Or you can use what's called the alternative coverage period, which means if your payment periods, if your pay schedule and you pay more than once a month happens after that, you can start your covered period for your payroll on the first day of your next pay period. This just allows you to line up your pay period with your actual covered period of the loan. The last thing you need to understand is what's called the base period. This is the comparison period where we're going to check who you employed in the past and did you bring them all back when you got the loan. Option 1 is February 15th to June 30th of last year, and option 2 is the first 2 months of this year. Now, if you're a seasonal business, which means you don't operate all the time, you can pick a 12 consecutive week period in this option 3. Now, to understand how we do this, we take the FTEs we calculate during your covered period and we divide them by the base period. We multiply that by our funds utilized, and that tells us our deductions. So here's an example. We have all these employees here, and this is their hours worked. Notice employee F works more than 45 hours, so they get rounded to 1. Everybody else is divided by 40, and we get their percentage. We add all those little bits up, we come up with 7 full-time equivalents. Add all these part-timers up, they come out to the equivalent of having 7 full-time people. Alternatively, you could call all those under 40 a half. So you'd have 1 full-timer, everybody else is a half, and then you'd end up with 6.5 full-timers. Again, you need to do it both ways and see which one works best for you. So here's an example. We have a company, again, in their first base period, they calculate 8 FTEs, averaging out the months. And in the second period, they average out 10. But don't get hung up on the 10 versus the 8. It just means in period 2, maybe they hired an extra worker, they paid a few more hours. All that matters is that we calculated 10 FTEs for the second period and 8 for the first. We compare that to the 7 we brought back in our base period, and you'll notice that base period 1 is far closer than base period 2. We're only going to lose 12% of our forgiveness here, where on base period 2, we'd lose 30. So we multiply that by our use of funds, and we're going to lose another $10,000. So now we've come up with our modified total, $73,607. Now, the next thing we have to do is calculate our payroll cap. So we take the amount of funds we spent on payroll, we multiply it by 60%, divide it by 60%. That gives us $91,666. That's the most we could ever get on forgiveness. Now we just compare the modified total, the total loan amount, because you can never get more than that, and the payroll cap. And by statute, you have to pick the lowest of these 3. So in this example, $73,607 will be the amount forgiven. This company will end up with a 1% loan of $26,393. Should they have gotten an EIDL advance, that advance will also be deducted from this calculation here as well. And remember, in this example, this company didn't use $15,000. So the amount that they're really financing in this case is about $11,000. Okay, now there's a couple of safe harbors. The first safe harbor is if you kept the same level of employment, you didn't drop anybody, between January 1st and the end of your covered period, you don't have to make the calculations. The safe harbor is met. The second one is if you did have reductions from the start of the pandemic through April 26, but you bring everybody Congressman, thank you very much for the opportunity.
Thank you, Trevor, so much for your presentation. And for people who are watching, this entire town hall will also be posted on my Facebook page, so you can watch it at a later time as well and go through those slides at your leisure. And again, if you want to ask questions, please feel free to ask them through Facebook. I know that Victor Parker does have to leave a little bit earlier, so we're just going to ask Victor some questions, and then after that, we'll hear from Christopher. So Victor, some questions that we have. First of all, some businesses want to know, can they both have a PPP loan as well as the EIDL loan at the same time?
Excellent question. Thank you, Congressman. Yes, they absolutely can. So you can actually apply and actually receive an economic injury disaster loan as well as a Paycheck Protection Program loan. The key will be the use of proceeds. As Trevor just identified, they're going to be looking at how you use those proceeds for the Paycheck Protection Program within those payroll caps. So you will have to make sure that you use those proceeds accordingly to make sure you maximize your forgiveness for the Paycheck Protection Program and use your economic injury disaster loan for some of your other ongoing expenses and focus again on your Paycheck Protection Program really for payroll. But the short answer is yes, you absolutely can apply for both.
Now, let's say a business got the PPP loan very early on, went through 8 weeks. Can they apply for another one?
So no, so the system will not allow you, and the rules will not allow you to apply for more than one PPP loan per entity. So if your organization, if your company has applied for a PPP loan and it was actually funded, you would not be able to go back and apply for another Paycheck Protection Program loan at this time.
And you had mentioned that August 8th is a new deadline to apply for PPP loans. Is that right?
That is correct.
What about for the EIDL?
That is correct. So the EIDL folks have until December 16th to apply for that. So it's a much longer time frame to apply for that loan.
And what is the maximum amount they can get through the EIDL?
So as of right now, the maximum amount they can achieve or earn for the EIDL is $150,000.
Great, thank you. And if you would like to close out your part of the program by saying what else the SBA can do to help businesses or other programs, that would be great. And then we'll have Christopher present.
Thanks. So thank you so much again, Congressman, for your flexibility as well with my schedule. I double booked today. But certainly, again, I want to encourage folks to please leverage our small business development centers, SCORE, the center at Lindustry, to make sure that we're helping you go through this. We don't want you to have to go through this alone. We don't want people to experience lender fatigue. A lot of our banks may have reached their own individual cap, but as I indicated earlier, there are appropriated funds available for both of these programs. And so we want to make sure that we help direct you to the appropriate lender and to the appropriate resource, and our folks can help you do that. So please feel free to reach out again to the SBA Los Angeles District Office at LADO, L-A-D-O, at SBA.gov, or certainly reach out to Trevor and our colleagues and friends at the Small Business Development Center. Thank you.
Thank you so much, Victor, for participating today and for your tremendous public service. Really appreciate it.
Thank you, Congressman. Always a pleasure.
Thank you. Next, we're going to hear from Chris Perry. He is a business development manager for the Los Angeles Department of Consumer and Business Affairs. Chris, if you'd like to present.
Thank you, Congressman. Let me just make sure I got my slides pulled up here real quick so I can share with everyone. Go to full screen here. And here we go. So Chris Perry with the Los Angeles County Department of Consumer and Business Affairs. We're a business development manager there. Once this loads, are you guys seeing a black screen still? Looks like it. So there we go. Thank you. So the first thing I wanted to cover real quick is the Board of Supervisors acted very swiftly in early March, declared a state of emergency, and then asked the Department of Consumer Business Affairs and other departments to stand up what is now known as the Los Angeles County Disaster Help Center. This has been one of the most critical pieces of LA County's response because it's been providing services to businesses and workers who have obviously a number of questions. We've received over 16,000 calls since March 26th on everything from grants and loans, the eviction rent moratorium, reopening protocols, as you can imagine, unemployment insurance, immigrant services, layoff aversion, rapid response, and a number of other services. On the slide, you'll see the critical contact information. Again, I just wanted to mention that that resource exists. It is still fully staffed Monday through Friday, 8:30 to 5:30. Another major action that the Board of Supervisors took on April 14th is they authorized the development of the LA Regional COVID-19 Relief Fund. This is a partnership with Los Angeles City and philanthropic organizations, including Union Bank. It's a public-private partnership. County funds are leveraged to secure investments from other sources, obviously from Union Bank. The recovery fund will roll out in 2 phases. First includes grants and the second includes loans. The first phase launched on July 6th. The second phase, loans, is still in design. There's currently a total of $3.2 million committed to phase 1. The county put in $2 million, LA City $1 million, and Union Bank $200,000. These grants are up to $5,000 for micro entrepreneurs and $15,000 for small businesses and nonprofits. It's going to be 6 rounds over the next 4 months. So the first round of this funding occurred on July 6th. Yesterday started the second round. That round goes through the end of this week. So at the very end, I can share the website for this. So those interested can go ahead and make an application. The funds will be awarded via a weighted lottery system. The prioritize equitable distribution of grants across the county. Again, I mentioned small businesses. Small businesses for us mean those with less than $1 million in annual gross revenue for the purposes of this grant. Micro entrepreneurs are individuals participating in the gig economy, particularly street vendors, sole proprietors, 1099 workers, single member LLCs. We're talking folks with annual revenue less than $100,000. And of course, nonprofits, those are social service providers, as you well know, particularly those that serve low to moderate income communities with less than $1 million in annual gross revenue. So again, I'll repeat that the second round of funding, that application period is open right now as we speak, and will go to the end of this week. And every other week until we reach 6 rounds, there will be another opening for that application. So the Department of Consumer and Business Affairs, and I'll use my last few minutes to describe what we do, what we continue to do now, and what we did prior to COVID, and we'll continue to do after COVID, of course. Consumer affairs side of things, obviously you can see from the left side in this column here, we offer a full suite of consumer services from consumer counseling, foreclosure prevention, complaint investigation. We have mediation services. We can help with minimum wage questions. We have a Center for Financial Empowerment, the Office of Immigrant Affairs, and a number of resources that help our consumers in Los Angeles County get access to the free resources that they need. These are all free resources. I work with the Office of Small Business, and we have obviously a full set of services as well. The way I like to think about the Office of Small Business is we offer services that start from a vision, so an entrepreneur who has an idea, all the way up to how to compete for and win county, state, or federal government contracts. And the reason this is important, I understand we're obviously talking about emergency grants and loans and so on and so forth, but please understand that despite the fact that budgets obviously are becoming a little more lean based on everything going on with COVID, government is still buying billions of dollars of services, of goods and services from small businesses and local vendors. So I just want to mention these services real quick because we can concurrently offer these as our small business concierge service. We're a free consulting service. We can help you at any point in time from business startup to the point where you're competing for contracts. And that's anything from licensing, permitting process, how to do a fictitious business name with the county, what type of legal structure might you want to have, business plans, so on and so forth. We are a one-stop shop to help you get a permit through the county for those of you that are trying to open a business in Los Angeles County unincorporated. The County Board of Supervisors, along with the state of California, has a goal of 25% of all of our contracts in the county are awarded to small businesses. That means that of the $4 billion in contracts and goods and services that the County of Los Angeles buys every year, 1 billion of that minimum we'd like to see go to our Los Angeles County small businesses. We have a number of preference programs at another time, and love to happy to answer questions you guys have about this. But I will just briefly say that becoming certified with the county and trying to become part of one of our preference programs obviously reaps a number of benefits, as you can see from this list here, including 15-day prompt payment on invoices, which is critical for small businesses. And when I say small businesses in Los Angeles County, We're talking about those that have less than $15 million in annual gross receipts over 3 years, and 100 or less employees. So as you can imagine, that would cover most small businesses in Los Angeles County. So it's a pretty robust program. And of course, our community business enterprise program for minority-owned businesses and women-owned businesses, that is 51% owned by minority or women-owned businesses. We obviously have a program for those businesses as well as our disadvantaged business enterprises. I do want to mention a critical piece here. The Procurement Technical Assistance Center, or PTAC as we call it, is a partially funded federal center by the Defense Logistics Agency. PTAC exists to help small businesses get ready, compete for, and win contracts at all levels, county all the way up to the federal government. Down here is contact information for the center. Again, these are all free resources. We are here to help in any way that we possibly can. So please do leverage any one of these resources, from the grants and the forthcoming loans, all the way down to our existing suite of services. And I'll go ahead and stop there. Thank you, Congressman.
Thank you so much, Chris, for your presentation. And we have some questions for both you and Trevor. But before I ask those, I want to thank my staff for putting on this wonderful event tonight. Aurelia, Nico, Julian, Jenna, Aurora, and Annie. Aurelia Friedman is our point of contact for SBA loan issues, and you can reach her at 323-651-1040. Again, that's 323-651-1040, or you can email her at aurelia.friedman@mail.house.gov. That's AURELIA.FRIEDMAN@mail.house.gov. So now we're going to we have some questions here for, let me start with Trevor first. For the PPP program, what are some legitimate uses of the money for which you get loan forgiveness, and what would not count for loan forgiveness in addition, other than payroll?
Other than payroll. So the non-payroll items that you can spend it on are rents on real or business property. That would be like the rent you pay on your business location, or equipment rents, or other leases that you would have. Utilities at your business location, and interest on business debt. That would include mortgage interest or any other business debt that you have, but it has to be business. And it can't be commingled with personal debt.
Thank you. We have a question from Matt from Santa Monica. He wanted to know, for the PPP program, are 501c6s considered eligible to apply?
That's a good question. 501c6s, I believe so. I'd have to double check that. 501c3s definitely are. As long as they have payroll, I believe yes. The issue with the 501s is that they don't have any profit margin to qualify with. So you can only qualify them on W-2 payrolls. But yes, I believe they are.
Another question we had is, do you have to bring back all your employees back at the same time to get maximum loan forgiveness?
Okay, great question. So there it gets really complicated for people with lots of employees when you're bringing them back piecemeal. So the trick to that is that you'd have to use the safe harbor and get them all back by the time of your application. But keep in mind, there's 3 different calculations you make for full forgiveness. So one is that you've used enough of the money on payroll. Another one is that you've brought back those full-time equivalents to that previous level by the time of your application or the end of your covered period. And the last one is the wage rate. So even if you brought them all back by the end, which would cover you on the FTE calculation, if you haven't used enough of the payroll funds, you still won't get the full forgiveness.
And once you use up, let's say, your entire PPP loan, there's no obligation to keep the employee on, is that right?
There's not. Once you make the application, your covered period ends.
Now, for the EIDL loan, is there anything such as what's appropriate or not appropriate in terms of expenses?
Well, yes, and thanks to your office, we've been working on that. And if you don't know this, our biggest issue with the EIDL program up until about last week is that it's set up for a physical disaster because we haven't had a disaster like this in the history of the program. So it's really set up for working capital. You're allowed to use it to pay really any ongoing expense of the business that you would normally pay, but the lack of revenue stop you from paying it. But since there's no physical disaster here, you're not allowed to use it for what's called capital improvements. That would be buying new equipment, machinery, making physical changes to your business property, things like that. But actually, thanks to the congressman's staff and his office and their work, they're already working on making sure that all businesses can use these funds for COVID mitigation, whether that's PPE or plexiglass or HVAC systems or what else you might need to do to operate under COVID.
Thank you, Trevor, for your kind words. And then the last question for you for now. Let's say a business gets either the EIDL or the PPP loan, and then a week later they decide, you know what, we really don't want to do this. Can they return all the money, and is there any penalty or anything attached to that?
There are no penalties. You can return the funds. Keep in mind the EIDL loan, the interest accrues even though you don't have to pay it. The PPP funds, the interest gets forgiven with the forgiveness. And if you don't want it, you can just tell the bank you want it back. But keep in mind, banks are not in the position of taking the money back yet. So that might take a little bit of work to get through your banker to get the money back to them, because right now all their resources are going to underwriting and finishing these applications and getting the money funded.
Great, thank you. So Chris, a few questions for you. For the COVID-19 recovery fund, if someone, let's say, already has a PPP loan or EIDL loan, is that a strike against them, or can they still get the recovery fund monies?
No, it is definitely not a strike against them. There's nothing in our grant fund that would prevent them from receiving an award from the county's grant program.
Thank you. And do they also have to apply through a bank, or can they apply directly through your office?
I did not give that link. That's correct. So more than happy to direct them there. The website, and I can probably type this in the chat as well if that makes it easier, but it's lacovidfund.org/grants. And that's where you go. And the first thing you'll see is a big button that says apply here. And that would be the best way to go. So again, that's lacovidfund.org/grants.
Terrific. And is that I assume it's not a 25-page document, right?
No, sir.
Okay. All right, great. Thank you. And then you said the maximum amount for now is up to $15,000?
Correct. Of course, we'll always be on the lookout and try to leverage additional partners to increase the total amount of money we have to distribute. But right now, it's $15,000 is the maximum for small business and nonprofits, and $5,000 for micro entrepreneurs.
And these are grants that they don't have to pay back?
Correct. There will be I'm sorry, go ahead, sir.
Are you also going to have loans?
Correct. Yes. There will be a loan program. The final structure of that is still yet to be announced. So I would urge everyone to follow that same website that I just gave out. And again, that's lacovidfund.org/grants. Worst case scenario, you can always contact the Disaster Help Center. And that was on the first slide I gave, and the number for the LA County Disaster Help Center, I'll give it one more time, is 833-238-4450. And of course, we'll leave all these resources for your staff to post accordingly.
And do you have an number of employees limit on the kind of business that can apply for your grants?
Number of employees, not necessarily, but I mean, as far as the annual revenue, the way we break it down for small business, the annual revenue that we're looking for is $1 million or less. So, I mean, if we're just doing simple math, one could imagine you're probably not looking at more than 10, 12, 15 employees, but we didn't base it on number of employees. We based it on annual gross revenue. Our goal here obviously was to make sure that we're driving the money down to small businesses that maybe had a little bit of a challenge reaching some of the other funds that were out there already. So that's one of the drivers of why the board moved in this direction. So it's pretty targeted towards a particular audience. And again, it's $1 million in the world.
Thank you. I have one more question for Chris, and then we're going to have Trevor and Chris give their concluding remarks, and then I will conclude. So Chris, the last question for you is there a deadline for applying for the grants?
So we set this up in a kind of an interesting way. So right now we're on phase one, but there's 6 rounds of phase one. So phase one, again, is the grants. Phase two will be loans. So right now we're still in this grant and technical assistance period. There are 6 rounds of grants. We are only in the second round. The second round commenced yesterday, Monday, and goes through this Friday. So we are currently in an active application acceptance period. And then next week, our staff will go through, give an assessment of the applications, and the following week we'll open up again.
Actually, one more question. Let's say the business is headquartered in Nevada, but has a branch in LA County. Does that qualify?
In general, we're looking for businesses headquartered in Los Angeles County. Again, we're trying to really help the businesses in Los Angeles County that need access to additional resources. So we're looking for folks who are headquartered in the county.
Great, thank you. So now we'll have some concluding remarks from Trevor, followed by Chris. So Trevor, if you want to make any concluding remarks.
I'd just like to say this stuff can get very complicated. Don't do it yourself. There's a lot of free resources out there. Use them.
Thank you. And Chris, any concluding remarks?
Just echoing that sentiment again. Every resource that I know I've offered tonight, all the Office of Small Business Services, those are all free services. And of course, the Disaster Help Center, we field calls on every topic related to businesses and workers. So please, any questions that you have, we have 20 to 30 folks on standby waiting to help you at the county right now, and even more outside of that network. But please, free resources, utilize them, and we're here to help you guys get through this.
Great, thank you. And really appreciate your time tonight and your expertise, as well as all the hard work you've put in to help small businesses. I just want to say that all of us are working hard to try and make sure that we keep as many small businesses afloat as we can. And we're here to help. So please contact Victor at the SBA, or Trevor with the Small Business Development Center, or Chris with the LA County Department of Consumer and Business Affairs, or you can contact our district office. We are open every day. While our office is physically closed, we are open remotely, and our staff works remotely, and we're still handling the same number, actually likely more constituent cases than ever before, especially on small business issues. So please contact us. And thank you so much for watching tonight. This video will also be put on my Facebook page, so you can view it at your leisure. And thank you again for all you do, and look forward to working with you as we fight this pandemic and make our place and our county a better and more enjoyable place to live, work, and play. Thank you so much, and have a good evening.